Are you trying to buy a new home with no W-2s? Well, keep watching. Purchasing a home when you are self-employed can be a bit more complex than it is for W-2 employees, but it's entirely possible with the right preparation. And here's a little guide for you. First, you want to understand your financial position. Your credit score, it has to be checked in case you may need to improve it. And just know that a higher score increases your chances of approval and better loan terms. Also, your debt to income ratio. You want to calculate your DTI. Lenders generally prefer a DTI below 43%, but that can vary. You also want to organize your financial documents. Being self-employed means you'll need to provide more documentation to verify your income. And the key documents that they generally look for are your tax returns. Most lenders require at least 2 years of tax returns. Also, your profit and loss statements. This shows your business income and expenses. And just your bank statements in general, both personal and business accounts. Your 1099 forms, your business licenses, you want to verify those or provide those so that they can verify the legitimacy of your business, and client contracts or invoices to prove ongoing income. The next thing you want to do is save for a down payment. A larger down payment, like 20% or more, can increase your chances of approval and reduce the need for private mortgage insurance. Some programs may allow for smaller down payments, but documentation requirements might be a little bit more strict. Income stability. So lenders prefer consistent or increasing income over the last 2 years. So you want to avoid large fluctuations in income, as this can raise red flags. And shop around for lenders. Work with lenders who specialize in self-employed borrowers. Consider working with a mortgage broker to compare different loan programs. Research government-backed loans such as the FHA, the VA, or the USDA loans, or bank statement loans designed for self-employed individuals. And work with experienced professionals like your realtor, which would be me in this case, who can familiarize you with the self-borrowing process, the self-employed borrowing process. And you can either reach out with an accountant or a mortgage advisor to help you present your financials in the best light. And you can also explore non-traditional loan options like the bank statement loans. Lenders use your bank deposits instead of tax returns to determine income. Asset-based loans, where they use your assets to determine income, or no income verification loans. They may have a higher interest rate, but less documentation heavy. And just know that with preparation and organization, purchasing a home while self-employed is achievable.